Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 26th of June, and it's not looking pretty, even though we've still got a rising 200-day line that's up there at 75.39, which is a long way away now, and we've even broken the initial support there for June around the 74.45 level. Below that, looking for the floor of that falling trend channel from the beginning of April. That's currently pointing to around 73.50, which would be rather painful, I suppose. And the only plus point, if you can call it a plus point, is actually the way that the RSI now at 31 is very close to the buying zone, which a historical buying zone that is, on previous occasions, including at the turn of the month. When the RSI gets to 30 or just below, the FTSE does tend to rebound from there. We obviously saw that quite sharply in mid-March, and also saw that back in October at a couple of points there as well. So let's see if that kicks in. So 73.50, let's say, as the initial low there. If we break that, then it could be down to a November support line projection at 70.95. But at the moment, just looking at that 73.50 area on the basis that the RSI is approaching oversold levels. The signal on the latest decline came from the RSI failure at neutral 50. In fact, we had two of them this month, so you can't say that that didn't give us a bit of a steer. On to the DAX, which has been outperforming the FTSE. Not difficult, I suppose, but even here we're approaching the turn of the month support there around 15,700. Below that, looking for the old March resistance, late March resistance at 15,300. That's about the worst we're looking for at the moment, but obviously we could head back to test the 200-day moving average of 14,700 and the old March support. But at the moment, looking for 15,300 on the downside. Only back above the 50-day line, 15,900, would then get this market back on the trajectory of that rising trend channel from back in the autumn, for 16,000 plus, etc., etc. RSI here 39, so still allows for further downside, but the rule here that RSI 30 is the buy point, not quite as reliable as it is for the FTSE 100. On to the Dow, and I covered this over the weekend, but here we can see that we've had a test of the 50-day moving average, 33,600. Below that risks a move down to the 200-day moving average area in the floor of that rising trend channel from the autumn, around 32,900, 33,000. The problem here is that the RSI is still way up at 49, and so there is potentially there's big scope there for a move to the downside, and the 200-day line area and the old May support zone. This stage, only back above 34,000 on an end-of-day close would then give us the chance of a breakout and a move up to 34,800, which is the top of that mini March rising trend channel. On to Bitcoin, which looks like a bit of a party compared to the indices at the moment. Here we're hopefully in a mid-move consolidation. We've got rising 50 and 200-day moving averages. We broke that April resistance line after 2 months in the wilderness, you could call it. Tested old resistance as new support, so that was 25,000, so that worked too. And we're looking for the top of that rising trend channel from this time last year, as high as 35,000 by the end of next month. Obviously, if you're cautious, you wait for an end-of-day close through recent resistance at 31,500 as a momentum trigger for a move towards the 35,000 area. Onto the stocks, and starting off with a rather bigger one than usual. We've got Aston Martin, and the reason for including it today is because it hit one of our targets, which is very kind of it, around £3.50. Above £3.50, we can actually upgrade the upside here up to a resistance line there from November up to £4.50 by the end of next month. And that would build on the unfilled gap to the upside that we had, in a very decent looking breakout for the shares. Haven't really looked back since breaking that March peak around £3.10. And the upside here really valid while we're above £3.10, then looking for £4.50. But obviously the shares floated, I think, near £20. So a little bit of work to do, perhaps, for the bulls still on that one. On to Berkeley Energia, which I covered a while back, and That was on the occasion of breaking that resistance line there at the beginning of the month at 24 pence. The current view is that we're looking for the shares to make progress within a rising trend channel from December 2021, the top of that channel heading towards 42 pence now, and that could be hit as soon as the end of next month, provided we remain above the 25 pence zone. Normally get that progression 10, 15, 25, 40 on these rising situations, so hopefully above 25 we will get to 40 plus on Berkeley Energia. On to Creo, which has been improving over the last, basically the course of June. We've had a break of the 200-day line. Test came back to test it at 33 pence, above 33 pence, looking for the top of that rising trend channel from back in December at 43 pence, and hopefully we'll hit that well before the end of next month. Uptrend line in the RSI window as well, so all looking pretty set fair for that. On to a stock which is a bit of a quirky choice, perhaps, Cakebox. Here it seems to be just a few weeks back, sort of behind the Creo situation, but we've broken that trend line there from January, broken the 50 and 200-day moving averages around the 130 pence level, and basically above 130, looking for as high as £1.65 by the end of next month. So what the fundamentals are behind that is perhaps something to be questioned, but we had a gap higher back in April, and the shares really haven't looked back from that gap higher, only back below £1.25, really delaying or questioning the upside scenario. We've had also a couple of bounces off RSI 50, which, especially the latest one, which are quite encouraging. Onto a stock which the bears were attacking, but they seem to have gone quiet now. I'm not quite sure why. Or perhaps the way that the shares have gone up from 3.5 pence to nearly 10 pence this month may be a clue. And what we're looking for here is, we had our initial target there at 7 pence, next target is 10, and now we're looking for 12 pence, hopefully over the next couple of weeks for the stock, especially while we remain above the recent support for the stock at 8 pence. So above 8, looking for 12 pence on Eden Research, and well done to the bulls there for resisting the mudslinging on that particular company. Another stock which has been in the wars, but has actually we've been expecting it to improve, in fact, is IOG. Unfilled gap to the upside today through the 50-day moving average, one of the best signals around, and that suggests that we should easily have enough gas in the tank to fill the gap up to 6.5 pence, and maybe head up to as high as 7.5 pence by the end of next month. So looking quite chirpy there. If you're a fan of the shares and dreaming of how much the stock could go up, the obvious target there after 6.5 would be the 200-day moving average area at 10 pence. But obviously it's early days yet. At the moment we're just looking for that gap to be filled around 6.5. This stage only back below the floor of the gap at 4.25 pence would really question the recovery scenario. Onto a stock which I think appeared in the Mail on Sunday yesterday, and had a bit of negativity surrounding that. I think I read that somewhere, but here the shares have responded to the tip in the paper, and we've got a rising trend channel which has been in place since February, gapping up through the 50-day line again, which is always a nice thing to do. That suggests that we should be able to get up to 50 pence at least by the end of next month, especially while we remain above that 200-day line and the floor of the channel at 35 pence. So above 35, looking for 50. RSI is also pushed through neutral 50, so that's a help for the bullish cause. Onto a stock which I've never looked at before, which is Jade Road, and here we've had a U-shaped, I suppose it's a very wide U-shaped reversal. Looks like this is the handle on the turnaround formation, and especially while we're above the neckline resistance around 1.5 pence, looking for as high as 3.5 pence by the end of next month. If you're cautious, you wait for a break of the 200-day moving average at 2.25 pence before assuming that what has been a rather long bear market in the shares is finally over. In fact, we haven't been back above the 200-day line since the summer of 2021, so that would be quite a turnaround for the stock. On to a stock which is looking interesting at the moment. We've got Sareum. I covered this a few times in the recent past. This sideways consolidation, which has been in place since last month, looking quite well poised. I've got a bounce off RSI 50, the second one in a month, and above the 50-day moving average at 122 pence, looking for initially up to £1.60 by the end of next month. If you're cautious, wait for an end-of-day close through 140, the initial June resistance, before assuming 160 is on its way, and the upside scenario valid while we hold above that 50-day line currently at £1.23. Stock which I covered yesterday, but so exciting that I thought I'd cover it again today. Touchstone exploration. The reason for that is that it looks like it's breaking that resistance line there from March, around 66 pence, above 66 on an end-of-day close basis. And we're looking at a potential target there as high as the top of that rising December trend channel at 85. And that could happen as soon as the end of next month, especially as the RSI is pushed above neutral 50 for the first time since mid-April. Stock which had a cracking RNS today has been Wildcat Petroleum, and here you can see that the shares have been able to gap higher through that resistance line there from March, and the view here is that while we're above the old May support, 0.42 mid-price, we're looking for a potential target there up to 0.94 at the top of that falling wedge that we've had on the daily chart since back in August last year. If you're cautious, you wait for a break of the 50-day line around 0.59, but that gap higher today and the bullish divergence preceding it does suggest that shares are finally on their way. That's it from me today. More updates tomorrow.